Converting your California S Corporation to an LLC can provide greater flexibility and simpler operations for your business. This process, while complex, can be navigated successfully with the right information and preparation. S corporations and LLCs both offer limited liability protection, but LLCs provide several distinct advantages. These include simplified operations, reduced formalities, and more flexible tax options. Unlike S corporations, which are limited to 75 shareholders, LLCs can have unlimited owners. This operational flexibility makes LLCs an attractive option for many business owners. In California, you can convert your S corporation to an LLC through either a statutory conversion or a statutory merger. A statutory conversion is the more streamlined option, requiring you to file a certificate of conversion and articles of organization with the California Secretary of State. These documents must be filed together, and your corporation must be in good standing with all state taxes and filings current. Alternatively, a statutory merger involves forming a new LLC, drafting a merger agreement, and having your S corporation merge into this newly formed entity. While more complex, this approach may be necessary in certain situations due to legal or tax considerations. Before initiating either conversion method, you must obtain proper authorization. Your corporation's board of directors must first approve the plan of conversion. Following this, shareholders must consent to the conversion as required by California Corporations Code, Section 3300. In most cases, unanimous consent from all shareholders is needed, particularly because of the tax implications involved. Creating a formal plan of conversion is highly advisable. This plan should outline the name and structure of the new LLC, the effective date of conversion, how shares will convert into LLC membership interests, and statements affirming the rights and obligations of the members. Be aware that regardless of your conversion method, the IRS views this process as a liquidation of your S corporation. This means shareholders may be subject to capital gains taxes on appreciated assets distributed to the LLC. Your S corporation must also file a final California Form 100S, indicating it is the final return, and pay any outstanding franchise taxes. Once the conversion is complete, several follow-up actions are required. You may need to update your employer identification number or apply for a new one. Business licenses and permits must be amended to reflect your new entity type. Contracts and agreements with business partners, vendors, and clients should be revised. You might need to close your corporation's bank accounts and open new ones in the LLC's name. Additionally, you must notify tax agencies like the California Department of Tax and Fee Administration and Employment Development Department about your status change. The advantages of completing this conversion are significant. As an LLC, you'll enjoy greater flexibility in management and taxation options. Multi-member LLCs are automatically taxed as partnerships, while single-member LLCs are taxed as sole proprietorships. However, you retain the option for S corporation election, if that better suits your needs. Converting from a California S corporation to an LLC involves complex legal and tax considerations. While the process requires careful planning and execution, the operational flexibility and reduced formalities of an LLC structure can provide substantial benefits for your business. Consulting with legal and tax professionals throughout this process is highly recommended to ensure compliance and minimize potential liabilities.